Are you or your clients looking for a regular income solution with compelling returns to diversify your portfolio? If so, Neighborhood Holdings may be a great option for you. Listeners of this podcast will appreciate that public markets can be turbulent and finding a good private credit fund can be tough. But Neighborhood's track record, transparency, and investor alignment sets it apart from the pack. With nearly 10 years of consistent performance and a target net yield of 8 to 10%, Neighborhood has a track record of providing monthly income to investors without the volatility of public markets. How do they do this? Where banks invest in mortgages up to 95% loan to value, they also make borrowers jump through a lot of hoops. Many borrowers in transition aren't able to meet those hoops. Neighborhood has partnered with banks and brokers to provide quality borrowers with temporary financing secured by first mortgages at an average loan to value of less than 60%. Where other mortgage funds might take more risk by lending against construction, bare land, or jumbo loans, Neighborhood is focused on your average residential borrower who owns the average house in the neighborhood. Plus, their variable rate with a floor mortgage pricing benefits investors when interest rates go up and mitigates downside risk. Check out the link in the description or visit neighborhoodholdings.com to view the offering memorandum or speak to your financial advisor for more information. That's neighborhoodholdings.com/Loonie Hour. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back or have the shortest memories when it comes to investment. We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to Loonie Hour, episode 178. As always, joined by the three amigos, Boomer, Icecap, Rich Diaz. Boomer, where are you?
I'm on holiday with Mrs. Icecap for a few days. We're in northern Spain, a little town called San Sebastian. If you know it, it's also, I know Rich has been here before, but it's a really good place for food and wine and hiking and stuff like that. It's a different part of the world that if you know how to find it, it's amazing. So just look, we're right on the beach here, and we're having a real nice few days. What's happening back in Canada then?
There with his hot
Anything?
wife.
It looks really cold. It looks really cold. Why are you wearing a jacket?
Because it's a little coolish. Yesterday was quite warm. It was 25 degrees yesterday. Today it's cooled down a little bit. But it's like it's 6 o'clock here at night. So it's typical Spanish lifestyle. People are just waking up now, getting ready to start their day. Like the 5-hour nap is over. And off
to be
we
fair,
go.
a siesta is an amazing idea. Not that I would ever do that when I work from home. I would never take a 2-hour nap in the middle of the day, but it is a good idea.
I'm a big fan of recharging the body if you need to. So we have that. What's news back that way, guys?
Works from home every day, sleeping all day on the ice cap time.
I've never done that.
Man, Keith, that hotel looks pretty fancy. Now I know where all the Loonie Hour funds have been going.
Yeah,
right.
if you look at this place, San Sebastian, and you'll see one of these nice hotels right on the beach with a huge lit up sign. I'm up here on that. I have that room. I have that one.
Man, we're gonna have to start adding in about a dozen more ad sponsors in the pod.
We will.
Hope you guys
Wait,
are ready
I have an
for
honest
it.
question. What's the best thing you've eaten so far? Because San
Oh, that's
Sebastian
a
is
good-
really well known for food. Sorry.
Yeah, their local beef here is amazing, Rich, and any kind of seafood is exceptional as well. So like I think tonight we're having like a whole turbot will be grilled in front of us, but the wine is great, the white wine and the Rioja and the cider, all that stuff is just amazing.
Little
It's
Twinkie
good.
for dessert.
Ain't no Twinkies made it to this part of the world, guys.
All
Come on,
right,
let's
well,
move on. Let's move on. This is a like a tourism announcement for this place. And they're not paying me either. They're not paying me. So I'm paying them.
All right. Well, we got lots to talk about. Obviously, the tariff stuff continues to be sort of moving goalposts. We'll get into that. It's funny. I think we were working on getting an economist on the show for this week, but he iced us. But I think it's just moving so fast. It's like you get an economist. We was thinking about it. I was like, you get an economist on to talk about the impacts, and then the following day, the tariffs are gone. So we'll kind of get into a little bit. We got a little bit on the housing file. There's lots happening in Europe, which I'm sure Keith will get into. Lots happening in that bond market in particular, Japan, China. So there's lots that, I feel like the world, Keith, is just changing so dramatically every few weeks. Just talking with regular Canadians on a day-to-day basis, and everyone's just like, what is happening? So
I think that's the theme for not for the episode, because we have reached this turning point. Because of all the new policy changes taking place from the Americans, everything is happening at breakneck speed. I think that's the right phrase I'm looking for here. And the sooner that people and groups and countries understand it and accept it, then the sooner they'll be better able to position themselves to benefit from it. And right now, it might seem chaotic, but again, the message coming from the Americans, it is crystal clear. We are going to focus on our domestic economy and policies. Everything we do is for the benefit of America, whether you like it or not. And we're going to instead use our global influence in a different way. So no one is no longer taking advantage of the military that the Americans have. If you want to take advantage of it, you want to pay for it. Or as what they're telling the Europeans, Rich, what do they tell the Europeans to do?
I don't know. What did they tell them?
Create their own military.
Yes.
We have all that happening. But it's creating, it's funny because last year we had hardly any volatility in financial markets. I think 1 month was a bit rocky in August. And at the beginning of this year, we've been sharing with everyone, hey, like something is going to be a bit different. And boy, we've already had it so far in, 2 months and a week or so into it.
Mm-hmm.
Yeah, but it's exciting now. Last year, no one was awake. Everyone was hanging out on the beach, eating pinchos and drinking Rioja and stuff. Now it's different. Get ready for fun.
Yeah, well, I think we'll do our best to unpack it. I think, obviously, it's tough because I think, Rich, you had a funny story. You're on CBC radio. Was it this morning?
Yeah, it was this morning. I woke up very early. And
you got to share that story. So
Okay.
Rich, you put a really good tweet out.
Yeah.
It's funny. Rich messages me in the group chat. And he goes, "Hey man, can you give me a retweet?" And I didn't see the message. I looked like 4 hours later, and I was like, okay, I go to give him the retweet, and I look at the tweet. It's already got like 400 retweets already. I don't think you need my help.
To be fair, I never ask you to do that. Normally it's always organic, but yeah, so I just retweeted, my view is basically that that the Canadian government is using, what do we say? What did Winston Churchill say? Never let a crisis go to waste or something to that effect.
That was it. Yeah.
And I think that that's exactly what, the Canadian federal government has done, which is, has really leveraged the Trump threat to sort of consolidate power, to sort of rile up some nationalistic sentiment, to for all these different reasons that you might do. And then that's a story as long as time, right? For time immemorial, you've had unpopular governments basically make a meal out of an existential or outside threat, real or imagined, in order to improve their state at home. And that I was making the case and just sort of reminding people what's going on in Canada. And I was invited to CBC, and it's an absolutely beautiful building. I can tell you that. Holy shit, that's a nice building. Your tax dollars hard at work. I'm a big fan of the CBC, right? No, I don't want to.
I think they're renting from Brookfield. I think Brookfield owns it.
No, they're not renting from Brookfield. I'm sure they're renting from somebody else in the Laurentians. But the point really is that I went on. It was a very, very quick interview, which makes me so appreciative of the fact that we get some time to sort of expand on thoughts on this on our show. But yeah, so as soon as I sat down on my desk, I got one email praising me, thanking me for coming on and for sort of for my realistic and level-headed approach, which is, my sister would be surprised to hear that. And they were really grateful, and I was really kind of appreciative of the email. And then I got an email from my best friend's mom. I got a message from my best friend's mom saying, or I was forwarded and saying, just heard your friend Rich on CBC. Wow, he has some tough views on Canada. is he a Trumper? and it's just amazing. It speaks to the volatility that Keith was mentioning before. It speaks to sort of the breakneck speed at which we're dealing with all these things. The reality that our world is quite polarized. That the truth is nobody really knows what's going on, and I think we sort of just need to embrace that kind of those widely differentiated views. And it was a fun opportunity. I'm really grateful for it.
Well, I think we know what's going on. Just to be clear.
Okay.
Well, I think we should just expand on that though, Rich, which is like today's podcast. Hopefully people do their best to sort of pull their political bias out of it and try to listen to the episode objectively. Because I think it's like anytime you're sort of like critical of Canada today, everyone just assumes that you're not on Team Canada's side. But to Rich's point, he was just illustrating that we had a lot of sort of economic woes in advance of the Trump policy measures, which again, we'll argue are not justified, but nonetheless, I mean, clearly, Rich, I mean, the history is, full of examples of internal conflicts happening and governments seeking basically a war as basically a distraction. And then, I mean, we're in a tariff war. So, I mean, regardless if it's Trudeau or Pierre Poilievre or whatever, I mean, let's be honest, anyone that's in power is going to use it to their advantage. And I think that's kind of what's happening today.
I mean, that's my view. And listen, you guys have heard me for 170 odd hours. I mean, anyone and everyone knows that I'm extremely proud to be Canadian. But in order to fix the problems you have, you need to admit that they exist. And blaming, external factors, although convenient and politically expedient, I think absolutely misses the trick, and it does a disservice to Canadians and Canadian citizens. So anyway,
so let's talk about
the fair point. But I mean, we're sort of all on this same page here. And when we're not, we'll certainly give it to the other person. I mean, I think we are fair with that because, Steve, you have to admit, every now and then Rich is a little offsides.
Yeah, and you're wrong about Japan.
We're bringing Japan into this?
I'm just saying, you're wrong.
Save it for later.
I'm not wrong on Japan. This is not the Japanese episode.
No, next week.
But, again, people may not like what I'll say now. But, again, everyone's, as you said, Steve, like you're allowed to have a view. But the world, they've tried to change it that you're not allowed to have a view. And you're told what your view has to be. But right now, over the last, what has it been now? 5 weeks, 4 weeks? Mm-hmm. Since Jan 20th, I guess, look at it that way. The Canadian government, are they defending Canada? Are the Liberals defending Canada right now? No, they're defending their turf. They were down in maybe high single digits, low teens in the polling. And then they figured out, oh, wow, we're going to dig our heels in here and say, hey, the Americans are bad. We're defending Canada. And next thing you know, they start creeping up in the poll. So then they go with it. And then the media goes with it as well. Now you have the Conservatives and Poilievre. He's saying, well, I can't take the opposite of this one. So I'm going to get mullered on it. So then he's like, yeah, of course, so we're standing up to protect Canada. And again, no, they're not. Everyone is doing this to protect themselves in terms of the political parties out of Ottawa. To do what's best for them. And for each of these major parties, they're doing it to get one to get reelected, the other one to get elected. And they're, again, the media is whipping everyone into this frenzy. Someone's, Rich's friend's mother is calling him a Trumper because he has a different view on things. But it is what it is, Steve. I mean, that's where they are. But let's talk more about, what's realistic and what's really happening. Because at some point, all this is going to turn again. And I think people who are being level-headed and then, maybe it's a couple of weeks from now or a couple of months, people, all this is going to blow over in a way they'll realize, okay, well, this is what we now need to do instead. I see houses with a Canadian flag up over the door. Never seen it before. Never. Not once during 10 years of productivity declining did I see a Canadian out protesting. Or deficits nonstop. Anyway, so let's set it up, Steve.
Lower the commie flag, put up the maple leaf. Well, yeah, I mean, lots of problems. I mean, speaking to your point, Doug Ford obviously called the snap election, won it. So, obviously used that to his advantage and got his mandate. He's been very vocal about Rich cutting off power to to the States. And again, we can kind of get into that in a little bit, but
Even the hospitals? Just saying. Carry on.
Okay. How do we recover from that one?
Sorry.
Anyways, lots of problems going on. Problem that I'm particularly focused on, of course, is housing. So we got some data out of Vancouver and Toronto. That's just it's a mess. I mean, obviously the tariff stuff has if you're going to go make $1 million, $2 million purchase, you want to be confident about the economy, your job. And so people are just, I can tell you flat out are just not making decisions today. People are out there looking, but in terms of like offers coming in, you can see that ultimately reflected in the sales data. Vancouver here where I'm at, home sales were down 12% from last year. Of course, last year was a soft year. So we're like well below long-term averages. Inventory is rising. New listings are surging higher, and it's almost particularly in, remember, this is a key theme that we've been talking about in the Loonie Hour for many months now, which is like the investor market is pooched. Like it's toast, it's rolling over. People are trying to get out. They waited and they waited and they waited, hoping for the market to recover, maybe hoping rents would go up, and it just hasn't. And so I feel like now we're kind of reaching some of that sort of capitulation moment. At least that's what the data is showing us, and a lot of the conversations that I'm having on a day-to-day basis. If you look at what's happening in the new listing space, particularly for condos, right? That's where most of the investors are playing, right? You as an investor, you go out there, you buy a pre-sale condo, you buy a 1-bedroom, small 2-bedroom, you rent it out. So if you look at the flood of new listings, so in January, across all of Greater Vancouver, we had a record high number of new condo listings. It's all-time record high for new condos in January. February, exact same story. So to start the year, you've had back-to-back months with all-time record high number of new listings hitting the MLS in the condo space. You contrast that with like a entry-level single-family house. If you look at the detached inventory, it's well below long-term averages. It's very, very low. So what's happening basically is that sort of end user market is not really listing per se. People just aren't necessarily moving, but the condo space where the investors are playing, they're hitting the exits, and that is obviously dragging that segment down. So detached prices are actually up year over year, and then condos were down about 3%, and that's sort of the same trend that we're seeing in the GTA. So Toronto sales were down something like 20+% year over year. So they're down 27% from last year, which outside of the pandemic year was the weakest month since the GFC. So that's Toronto home sales. So we're running at Toronto's running at crisis level home sales. And our good friend of the show, Bob Sacamano, he had a good tweet noting that seasonally adjusted home sales in Toronto were down 28.5% month over month. So the only months that have had a lower level of sales in the past quarter century, March and April of 2020. Of course, we know what happened then, and December of 2008. So seasonally adjusted home sales on a month over month basis plunged to almost 29%. So yeah, I mean, I think for the housing market, it's frozen. It's completely frozen.
And that's what's really interesting with that, Steve, is that again, we are not in this severe recession at all. People are struggling in some parts of the country and everything, but we're not seeing shops are closed down and massive layoffs and things like that. Again, you hope it doesn't happen, of course. But Rich, what strategy?
It's an excellent strategy. Oh no! Hope is a bad strategy.
It's the opposite. It's not an excellent strategy. But again, if I don't know if there is a trigger point to be rolled over harder. I think they'll be looking back on this month's data, Steve, to say, wow, that was a good month.
Yikes.
Yeah, crazy. I mean, it's crazy. Like, just to touch, a final point on this. So the Fraser, so in you have Greater Vancouver, which is kind of the city core here. And then remember during the pandemic is everybody moved further out into the suburbs, right? Wanted more space, cheaper housing, work from home. So that market like really boomed. Obviously, you had massive price growth in the sort of suburb markets. And that's all kind of like reversing now. And obviously, a lot of the investors jumped into that space, buying a lot of pre-construction condos. So if you look at we call it the Fraser Valley market here in Vancouver. So that's like your suburban markets, condo listings. So like not like new listings coming to market, but like total inventory that's sitting on the market trying to sell is at all-time highs in the condo space. All-time highs. So yeah, there's definitely more pain to come, more downwards pressure on pricing there. And we still got the banks dishing out 100% loan to value mortgages on pre-construction units. And, to Keith's point, provisioning for loan losses that don't necessarily coincide with the recession.
And Steve, what's happening with the mortgage rate market, or the interest rate market, and with respect to like variables, and has that moved at all? Because from my perspective, it's quite a crude measure, but I look at the overnight index swaps, and we're still, from that perspective, there's been basically no movement. A little bit down, but it's quite flat out the curve. And I was just curious what you're seeing.
Yeah, I mean, I guess with all the tariff stuff, what are we still pricing in? Like 2-3 cuts from the BOC?
Yeah, but it's kind of amazing and rather surprising how well it's held up, let's say. Right, we're being told that we're entering into a nuclear arms agreement with Europe to combat the aggression of America. Real quote. Yeah. And yet the bond market is actually in my view, relatively stable, given we're about to be invaded. You'd think one thing would happen would reflect the other. So it
doesn't reconcile, right?
Right, but to that point, like the volatility, I mean, I like literally like my homepage is like the Canada 5-year bond yield. Like it's just moving all over the place. BMO was out the day the tariffs were re-announced a couple days ago, being like, okay, our call is going from 50 basis points to 100 basis points of cuts. RBC went from 50 to 75. Okay. So that would, hypothetically, right? I mean, your variable rate mortgage today is it's about 4.4. Mm-hmm. So if you got 100 basis points worth of cuts this year on the backs of tariffs, you'd bring your variable rate to 3.4, which I think would probably bring a lot of relief to people. Your fixed rates today, there's just been, when I chat with the banks, like there's been so much volatility in the bond market over the last week and a half that like they've been slow to pass on the discounts on fixed rate mortgages, because it's like almost impossible for them to hedge and price these mortgages because the yields are moving 10 basis points every day.
Okay.
So like right now, we went from like the Canada 5-year hit like 2 days ago was at 250.
Yeah.
Looking at the screen today, it's 271.
Yikes.
It's up 20 basis points in a day and a half.
So let's just go through a scenario. Say they do cut by 100. And you assume in that scenario, it's because growth has that negative sign in front of it, mm-hmm. right? What happens with the deficit at that point, the budget deficit?
It balances itself, you see.
No, it doesn't. That's like Europe stuff. I see people talking about that over here. It doesn't balance itself. It's going to just get blown out of the water, which then, the Ottawa, they have to do a massive round of borrowing. Mm-hmm. What happens with the long end of the curve then?
I think it goes up. I think the yields go
higher. What happens with your 5-year, Steve? Your 5-year homepage?
It should blow out hypothetically.
Yeah, it's just going to be a disaster. So, none of this stuff makes sense. And like Germany had all this like ram-packed into 48 hours, basically. Yeah. So I think that is a very good blueprint of what could happen over this way.
You want a prelude?
Well, we got to talk about Germany.
Well, I can give you a prelude.
Honda? Wasn't that the Honda car, the Prelude?
That was actually a good car. Yeah,
it was a cool car. Was that the 2-door? I like that car.
I think
One
everybody
of my
in high
friend in
school
high
wanted
school.
a Honda
Everybody in
Prelude.
high school. Well, I didn't. I did. My one of my rich friends.
My
in high school
buddy,
had
my
one.
best friend Jerry, back in high school, he said, Keith, I might get a Prelude. I said, oh man, that's a cool car. He said, yeah, I know.
You probably had a hot wife.
Yeah, he did.
He didn't get the Prelude. It didn't happen.
No.
No, so on that note, I mean, well, obviously we'll jump over to Europe in a sec, but just domestically here in BC. So it's funny, right? In all the tariff news, the BC government, I think, used that to their advantage, and they dropped a stinker. The BC budget deficit blew out to record highs. So $10.9 billion deficit, all-time record deficit in BC. And again, I guess
What was
that's
that from,
without
Steve? Why did it blow out? Was it on the spending side or the economy
a little bit
slow?
on the spending side, healthcare, social housing. But I think ultimately, I think a lot of it is probably on the revenue side. I mean, they've been a huge revenue generator for them has been the housing market, developments, property transfer taxes, things of that nature. I'll be honest with you, I haven't looked at line by line, so I really can't comment too much on it. But I think to me, clearly is like, the what is it? The golden goose. The golden goose is housing in BC. Everybody knows that.
I thought it was
Everyone's
the
been
goose that laid the golden egg.
Yeah. It should be like the golden moose. Do you know? I'm going to put you on
So
the
it's not
spot
a
here.
golden goose laying a golden. It's just a goose that laid a golden egg.
Anyways,
I don't know. Somebody laid something.
New depth to Loonie Hour.
It's getting late over here, guys. It's getting late.
Anyways, long story short is they it's funny. They actually, well, yeah, we don't get into it, but they
No,
yeah,
but
they
I have
raised
a real question though.
Yeah.
Did they project forward? Because often when they release their budget, they'll say what's going to happen next year or whatever. I know they're going to miss it anyways, but I was just curious about what.
Yeah, I mean, so they forecasted it's going to get worse over the next sort of year and a bit, and then of course, as to Keith's point, that he always jokes about, they always have it sort of getting better 2-3 years out. But it's still like in 2027, 2028, they're still forecasting $9.8 billion deficit. So like marginally better than the year ahead.
Okay, cool.
And again, that's assuming, Keith, that's assuming no recession. So
right.
I don't know.
And rates, I think they might. You should look at the rate on the refinancing.
Yeah, I should look into that. But funny enough is you were talking about the Halifax stuff where they increased the tax on the foreign Toronto guys coming to buy housing. So the BC government raised, we have what we call as a speculation, and they call it a speculation and vacancy tax. It's essentially like a wealth tax. So like if you own a second home, they basically tax you for it. So they raised that on to 3% for non-residents, and then on Canadian citizens, it went from 0.5% to 1%. So what that means effectively is this. Let's just say I'm here in Vancouver. I've got my house in Vancouver, and yay, I've had a good year. I decided to go buy a vacation property in Penticton. And
Penticton.
Yeah, so you go buy like a summer cabin in Penticton. That will get taxed basically at 1% of the annual value each year. So let's just say it's worth, $1 million. You're going to pay $10,000 a year to hold this asset.
Whoa. Are you saying there's $1 million property in Penticton?
I mean, if you're on the lake, it's $2 million.
Are you kidding? It's super amazing, rich area.
Well, yeah, if you're on the lake, Keith, like if you've got money in Vancouver.
Where are you talking about?
Oh, God.
Anyways, if you've got money in Vancouver, like good chances you have like a lakefront property in Kelowna or Penticton on the lake. It's probably worth $2 million plus. I would argue closer to 3. And so unless you live in it or rent it out for a cumulative period of 6 months, then you are subject to a 1% tax every single year on the value. So if it's worth $3 million, you're paying $30,000 a year just to own this asset. The problem is in BC, but you can't, Rich, the tenancy laws are so stringent in BC. You can't just lease these things out for 6 months and then boot them out.
Well, that's not what I was going to say. I was going to say, again, to be the devil's advocate, is like, these are pretty wealthy. I mean, is there a threshold? Like if you buy a $200,000 house, Do you have to pay the 1%, or is it just 1% of those $3 million houses?
Just no, anything.
Well, okay, that's dumb. It should be means tested. Like if you buying a $3 million house as a second house, I feel less bad about you paying 1% on that as a tax. But
Seriously?
yes, of course, taxes should be progressive, Keith. That's what.
No, my
them off
friend.
the show.
Taxes should be progressive. That's why the carbon tax is asinine, right? Because it's
Man, like add another like 400 pages to the Income Tax Act besides 4 font.
Anyways,
It's ridiculous. None of these taxes should be. When you start taxing property and real assets like that, and you have to try to explain it, and cross your eyes when you're doing it, you just know that none of this makes sense. We really are.
We disagree.
You should see some of the
Yeah.
lawyers and stuff like chat with it. Like everyone's trying to like jump through hoops, find loopholes, find creative ways to like not get around it. It's pretty stringent. It's like it's almost impossible. And
Okay.
Lawyers and accountants love this stuff, and consultants. Holy smokes!
Yeah.
No, Rich, the problem that I have with it is that BC's tenancy laws are so. I think they're the strictest in North America based on
Stricter than Quebec. Okay.
They are very strict.
Okay,
you can't
cool.
really rent out a property for 6 months. Okay, you can't rent out a property for by the tenancy laws is you can't rent out a property for 6 months and then just boot them out and be like, all right, I'm living it now. It's summertime. I'm going to come use it now. So there's not really a way for you to actually like lease it out, because what happens is like once you give notice to the tenant to say, hey, I want to live in it for the summer, is you now have to occupy it for a full 12 months.
Yeah, that's dumb.
And then if you don't,
Why can't you just buy it and like rent it to your cousin or something on paper, or a shell company?
I'm sure they do that.
That's set
I
up.
don't know. There's people that I think it's like means tested. There's I don't know. It's honestly
I just got around this in 3 seconds. Surely there's other ways to do better with it.
Did you know that your personal data is being bought and sold online without your consent? Your name, location history, even your login credentials are out there, waiting to be used by advertisers, scammers, or worse. And with data breaches rising by 68% in just 1 year, the risk is only growing. Data brokers are collecting and selling your private information right now, and once your data is out there, it's nearly impossible to get it back unless you have Incogni. Incogni does the hard work for you. They contact data brokers on your behalf, demand removal of your personal info, and even follow up to keep it off the market for good. Take back control of your privacy in just 3 easy steps. Sign up and let Incogni know what data you want removed, grant them permission to work on your behalf, and sit back while they handle the rest. Try Incogni risk-free for 30 days. If you're not satisfied, you'll get a full refund, no questions asked. Protect yourself today at incogni.com/Loonie Hour. That's incogni.com/Loonie Hour. Incogni, because your data should belong to you and no one else.
Anyways, all right. Well, moving on. We've got so that's the fiasco in the BC's deficit situation. We've got lots going on in Europe, Rich.
Oh, yeah. Let me pull it up. So, I mean, listen, for years now, Europe has chronically underfunded its military. Make no mistake about that. One of the sort of chief, I don't know, one of the people who've been sort of ahead of, or not ahead of that, one of the most disappointing one, I guess, is probably Germany. They have a legacy with the military industrial complex, which we'll park for now. But what's really, really interesting is over the last few years, so part of the reason there was the election was because there was an issue with the budget, and there's something called a budget debt break. And what the new election, so the new election results have allowed for is some kind of mandate to sort of get over that debt break. There's a couple of wrinkles, but in short, what they're trying to do is sort of separate, the normal spending with the infrastructure and defense spending that they want to sort of add on. And the market's been really receptive to it. I think it's about 500 billion. I'm trying to look up the article now. I had it and I lost it. Sorry. And it's just it's a huge sea change in Europe's attitude towards A, defense spending, B, budgets and austerity. Remember, the Germans are quite an austere people, and they've been really quite reluctant to spend over their budget caps, for better or for worse. And, as Keith has made very clear, this is sort of just a continuation of this inflection point that we are witnessing there, or we're living through. And the markets have reacted. So the bond yields are up, the equity markets are up, defense stocks are up massively over the last couple months. And it's just a really interesting period. Keith, did you want to just add on to that? Because I'll look up this article. Sorry, I screwed up.
Well, I thought you had it's a pretty exciting few days in Europe, and I thought you could have done a bit better, Rich, with describing what was
I had
going
it.
on.
I screwed up. I had it for
Like
me
you
in front
lost
of
the
me, and
energy falling
I
out of
know.
it. So, guys, look, real quick, 30 seconds with this. The Americans have said, "Hey, Ukraine, Russia, we want a peace deal here," and and you can go inside and outside of it, whether it's right or wrong, but they're trying to do that. And because it didn't work out that way, the Americans say, "Well, we're no longer going to fund you, Ukraine. If you want to keep this going, get your own help." And the Europeans have lined up behind each other. The Brits have, and all across the EU and everyone else, kind of like here in Canada, everyone's going to try to stand up now to the Americans. And the only way that Europe can now sort of fill that void or gap is to create a European army. That's what they're trying to do. And it's kind of ironic because all they had to do to avoid this was to increase their defense spending anyway, to that magical, what is it, a 2%,
2%.
magical number, which again, you can manipulate that every way you want to. But suddenly, again, the political fever for this, it just went nuts. When starting with the Brits. Is this Starmer or Stamer? What was the PM's name?
Starmer.
Yeah, I mean, he effectively said he's going to put British boots on the ground over in Ukraine. You imagine if you're a young lad over in Llangollen, Wales, and you're told now you're going to go over there to get involved with it. I don't think your mom and dad would like it too much, but that's what's happening. And then all of a sudden, the Europeans, led by Germany, said, "Hey, here's an opportunity." Like you say, Rich, there's always an opportunity with every crisis. So on the face of it, they said, "Hey, we're going to," I think it was 500 bill. Is that the number
500 billion euros. Yeah.
Yeah, I think that's over a number of years, I would imagine. It's not just 1 year of spending, but it's going to be spread out, which is a very significant number. So we'll talk about the market impact first. But again, just from my view, you have that happening, and all of a sudden, you're building momentum. Now the French will do the same. The Spanish will do the same. The Italians are all going to increase it a bit to try to rearm themselves. And they're trying to rearm themselves against Russia. That's what they're trying to do here. And it doesn't matter whether it's right or wrong, agree or disagree with it. Because right now, the Americans are saying, "Hey, this is awesome. You guys can spend your money to defend your own border. We're going to look after our own domestic policies," because that's what we've been very crystal clear about. That's what we're doing. Meanwhile, it's actually it's a smart move by the Germans, whether they've said this out loud or they even understood what they've done, because their entire auto sector has been completely hollowed out by the Chinese. So they have all these fancy buildings, Volkswagen and Audi, Mercedes, and whichever one, whatever they're doing over there, Rich. And all of a sudden, they're going to be able to transform those factories into military product output. That's what's happening here. They're rearming. And whether
that
that
always
is
works out really well for Germany and Europe.
Well, that's a good point, Rich, because Europe, I was chatting today, and I just made a comment. Europe's had more wars than any other place on the planet.
Okay, relax. The Middle East has something to say about that, but anyway, carry on.
We'll tally it up in a ledger and see what it comes to. The point is, it's a lot of stuff happening. And there's a lot of reasons for it, of course. But, now all of a sudden, you have this, race to rearm. And again, it doesn't matter if it's good or bad. It is happening. It is absolutely happening.
The big point here is that the bond market is not necessarily cooperating. Bond yields sort of have blown out over the last couple of days.
Well, it is and it isn't, though, because, it's bond yields going up can be a signal that growth is going to improve. And if you do lots and lots of stimulus, I mean, Keith doesn't agree with that, but I think that
he's shaking his head.
Keith hates Europe. So
hey, I'm here. Like, I'm spending hundreds of dollars here in Europe.
All right,
I'm contributing. Yeah, but if all of a sudden for the Germans to announce they're going to spend that 500 billion, and again, everyone else is going to fall in line with another number. Okay, what are the budget positions like right now across Europe?
But you can't. But that's exactly what my point was. France's GDP deficit is 5%. That's outrageous. Germany's budget deficit is tiny. Their debt to GDP ratio is one of the lowest in the developed world. They have a massive amount of fiscal runway, even in the to do that. And I would argue for the last bunch of years, throughout all of the 2013, 14, 15, when they were doing austerity and imposing that on the rest of Europe, which you could argue they weren't supposed to, shouldn't have. Well, now they have an incredible amount of fiscal room, and frankly, their country has been undercapitalized and haven't spent any money in infrastructure in years.
Steve? What's the German 10-year bond at right now today?
2.78 or something.
So it must have been at 5% last week, was it? Because if it fell after this debt announcement.
No, it rose. Yeah, but
that's my point.
But that's not. But bond yields. But wait, bond yields are term premium, credit spreads, growth expectations, and inflation expectations. So,
you think the rise in the German 10-year is because of growth expectations? It could be. You don't know, but I'm saying it's because it's an absolute deterioration in their fiscal position. Okay, and at the same time, with the ECB, now all of a sudden the expectation is, hey, they're going to stop cutting. They're going to have to start raising rates because this is deemed to be, inflation positive. Yeah, inflationary. Yeah, absolutely. So, the euro has been, on a tier versus the dollar. It's up, 6-7% maybe in the last 3 days. Canadian dollar is flattish, maybe, a half a point maybe here or there. So this is a significant move, and I think it just accelerates. Ready for it, Rich?
Yeah.
Steve knows what's coming. It accelerates the demise of the old world, man. It's investing capital in, your military complex. I don't think that's... So think about it now. Now the Americans, they've done that complete magician trick, the sleight of hand, the distraction.
Yeah.
They're going to focus on other things, energy and, AI technology and all that stuff. Shipbuilding.
But it's not just military. Germany has been a chronic underfunder of many different things. One of them is infrastructure. They just don't. They have not, which is incredible, right? You think of Europe as incredible infrastructure, trains, ports, airports, and stuff, but Germany hasn't done that. I mean, their recent airport fiasco in Berlin a couple of years ago was a huge undertaking, and it took forever to get started and ever get it done, and et cetera, and was one of the only few examples in Germany over the last, let's say, decade and a half or whatever, that they've sort of spent money on infrastructure. And so, not all government spending is bad. And I frankly think that liberal democracies should have a strong and well-equipped military. And Germany has been underfunding its military for 30 years or 20 years or whatever. So, I mean, it's not...
Maybe the housing market will boom. Steve, this is an opportunity for you to move over.
I think, Rich, the German housing market, massive inflation with zero rate policy over the last decade.
Yeah, and then it's starting to come off now. I mean, show me a negative real interest rate, and I'll show you a housing.
But the ECB did they cut again today? Was it today, right?
Yeah,
they did a hawkish cut. It was a hawkish cut, Steve.
Yeah, they signaled that they're sort of getting to the end of their easing cycle. Whether we believe that or not is up for debate, but
they're now in a tough spot. So if you're sitting there and you went, to all your economics classes and stuff, and you're set up, and all of a sudden you just heard that, wow, the entire economic region where you're developing monetary policy for have committed to borrowing, oodles and gobs of euros, and that's going to blow out deficits even more. And all of a sudden now, right, because the inflation expectations are going to rise, and what's happened with borrowing rates?
They're rising.
Yeah, and they haven't gone up a smidgen. Steve, it's not like your 5-year homepage. Like, I think the 10-year across the Eurozone members, they've increased anywhere from 40 to 70, 80 basis points. That's enormous, guys. Now, this could reverse itself very quickly, right? Normally, when you get a very sharp move in one direction for any kind of market, you will get a reversal. It may not go back the whole way, but this should improve a little bit. but the ECB are sitting there saying, like, holy smokes, like, what are we going to do here? If growth is going to pick up and the cost of borrowing is picking up, and they're not collecting enough taxes anyway, it is set up to put, oh my, I just realized it. Guess what's going to happen to Lagarde?
Which she's going to be promoted to something else that she doesn't deserve.
She's going to become a squirmer. I know.
Oh my goodness. Well, okay, so let's just
add it to the balance sheet.
Wait, just to give, okay, so just some context here. So, so government debt to GDP, Greece is 164. That's ridiculous. Italy is 137. France is 112. This is all debt to GDP. Spain is 110. So, and then Germany, Keith, you want to take a wild guess what the number is? 62% of debt to GDP, which is one of the lowest in the G20. And Germany is about 25% of Euro area's GDP. For the criticism, and one of the reasons why Germany has screwed up the euro is that for years they should have been consuming more from their neighbors than they have been. And the problem with that is that it screws up current account balances and all kinds of different things. And so for the first time in living memory, Germany is saying, okay, we're going to do our part to support the rest of Europe. And to suggest that that's
a tough fight in Europe, because the Germans gave it to the Greeks, and the Italians 10 years ago for spending more than they should have been. Really, it was really more on the revenue side, of course, got hit. Now they're turning around and say, hey, our bad. We need to do the same thing as well. Don't mind us.
Yeah.
Well, I don't know, guys. I just think that, it's been an amazing few days in the financial world with all this. And in Canada, everyone's been, preoccupied with something else. But this move in Europe over the last 2-3 days now, wow, like this is the event of the year so far. And it's only February. No.
Equity market loves it over there.
It's March, yeah.
The equity market does love it over there. Europe's the best performing sector in the world by a long shot.
But if you have a big move, but that has to happen though, Steve. If you get the bond market getting crushed, that's what happened. By default, equities will usually make up for it on the other side, and the currency side will follow one or the other depending on the story at the time.
What about?
But it is. I don't know if it's a game changer, but this is a big deal, guys. This is a very big deal. So we'll start focusing a lot on this.
What about Japan? They got the Japan 10-year yield rises to 1.5% for the first time since 2009. It's kind of a story we've been tracking for quite some time. But Keith, I don't know if there's anything more to add there.
Because when they tried to do this, what was it, a year ago? I think it was, Steve, when we're 6 months even, like maybe not a full year, 6 months. The market wasn't ready for it. And it's slowly, they're letting the air out of the market over there. But again, the world has changed dramatically right now, led by the US with their policy moves. And they've been crystal clear what they're doing. Everyone should have the expectation that something is going to snap with this, because this is going to move massive amounts of capital around the world. And again, you can't have your bond market, just get sloshed overnight and think, oh man, this is awesome because our debt to GDP is only 62%, Rich. Is that the number?
Those numbers matter.
Like that. I know it all. Well, no, I think it's the change that matters with all this. But again, we're heading down this road with all these policy decisions are being driven and initiated by the Americans. Because again, Germany didn't decide on its own. Hey, we just had an election. We all fought them, doing this and everything, and now we're out of the window. We're going to start, ramping up spending. It's the Americans have driven people to make decisions, and it doesn't matter whether they are the correct ones or the rational ones or not. They are pretty significant decisions, and Canada hasn't made their move yet. And I don't know what we're going to do up here. I don't know if they want to make a move or what, but I think what they're trying to do is not the correct policy right now.
So just to kind of add to that, Rich, one of the other ones we were talking about is China. So China's announced another massive round of stimulus, I think 1.3 trillion yuan. in special treasury bonds this year to fund its stimulus measures. So, I mean, it's interesting, right? Because I think like what we've seen is, over the last couple of weeks, obviously, U.S. equity market selling off, some people concerned about trade wars ramping up, and sort of the reaction function from other major countries has been stimulus, right? So you've seen obviously Germany, parts of the Eurozone, you've seen China, um, ramping up stimulus. Obviously, we've got the Canadian government talking about stimulus measures here as well. And so sort of the offset for this tariff war is basically control print.
Maybe, but I think, yes, I think as maybe that's the umbrella term. I think that's fair, but I think we need to remember how we got. I think China is a completely different story, right? China is in a deflationary bust. They have a housing market that's bust. They have way too much debt, Keith. It's almost 300 and whatever percent of GDP. They have a falling population growth. It's not clear that productivity is rising. Youth unemployment was rising until they stopped publishing the data, which is absolutely bananas. True story. They and their banks needed to be recapitalized. And so when they injected the 400 billion yuan, which is the most, I think that was last week or whatever, that is that's, I think, a different sort of crisis. I think that's slightly different than what we're seeing in Germany, in my view. Keith and I are going to start fighting about this, I think. But I think so in a sense, yes, in the umbrella term, maybe it's control print, but I think it's for fundamentally different things. I don't think China can, work its way out of this housing bust. I think, as we're seeing in Canada, you need those prices to clear. And the longer you prevent that from happening, the more sort of weird, wonderful externalities that you get that are negative for society. I think what Germany's doing, I think, is a bit different.
So let's reset this here. So the solution to everyone's problem right now, from an economic perspective, there's not enough growth being generated to improve government budgets, right? Doesn't matter if it's Canada, the Chinese, Japan, Germany, you name it. Everyone's in that situation. And so what I'm hearing, the solution, so it's a debt problem. It's not a spending problem, maybe, but the solution to this is to borrow even more money. So see what I mean? So the solution for a debt problem is more debt.
Well, there's just no appetite for austerity.
That's like
right?
giving someone who eats too much more food. It doesn't work.
Yeah, but there's no appetite, political appetite for austerity. Nobody can run an election, like on austerity. Like Donald Trump says that he's going to run an election he said they're going to cut the budget, but they're about to cut taxes. Pierre Poilievre, God love him, he's been very critical of the budgets from the Liberal Party. I will bet you guys a Twinkie that he's not going to be able to run a budget surplus in his first year or even second year. Despite his best efforts, if we're about to enter into a recession, which screws up the revenue side of it. So, until somebody can be a...
But this is what I love, though.
Sorry, go ahead.
Again, so we're not being judgmental about governments, for sure. No one ever does that. But we know what the policy is now. It's more debt. More debt, more debt. It doesn't matter where you are, what color shirt you're wearing. I mean, more debt, more taxes. So it just accelerates this path and trend we're going on. And someone's going to have a US dollar funding problem very, very quickly coming up here. And that's Rich's other favorite market, the emerging market world.
Wow. I think they'll probably be sacrificed. I think that's a different issue.
Yeah, it is. I just think now it's become even more clear where we're headed. And it just, if people are able to see that, then it'll give them better opportunities coming up in the marketplace.
You guys want to touch on the tariff stuff here? Obviously, it's front and center in Canadian media. I feel like we've kind of, haven't necessarily touched on it too much, Rich, but it's tough because I feel like it's kind of like a moving target. I had a bunch of people that listen to the show, send me messages and say, oh, looking forward to this week's podcast, tariffs, so much to talk about. And I just feel like it's like, how do you talk about it when every single day President Trump changes his tariff views and policies, right? I mean, we're reading across the screen here right now. that the U.S. is going to delay tariffs on Mexico on all goods under the USMCA. So the agreement is until April 2nd, Trump said in a social media account. But Rich, I don't know if you have any thoughts.
I mean, I just think it's, and then yesterday or 6 hours ago or whatever it was, Trump carved out the auto sector for exemptions from tariffs because our economies are, in my view, inextricably integrated. When you build a car that's a GMC pickup from Detroit, you might have the engine block built in Southern Ontario, then it gets shipped to Detroit to put in, the tires, and then the lights go back on in Ontario again, and then so it goes back or forth. I've heard numbers between 6 and 8 times. And so what are you going to tariff every time the product gets shipped? You're going to put a 25, I mean, the car's going to be $5 million, right? Because it compounds, right? 25% times, maybe not $5 million.
Maybe you get one of those punch cards, the old fashioned punch cards. You go to a coffee shop, they can, clip it that way.
Yeah, that's exactly.
Right. You know what's like, everyone's trying to calculate what's the cost or the damage of tariffs. And, a lot of people are slow walking it. Some people have definitive numbers. I just don't think anyone actually knows what it's going to be. And I think Steve, what you're sort of suggesting, same with you, Rich, as well. I think it's not a tariff war. It's a battle. And I think it is going to move somewhere before you know it. And then there's a more of a focus on something different.
Well, I just think spending the energy trying to calculate the impact is kind of a waste of time, given that, again, every day there's a new carve out or a new change, or we're delaying for 30 days. And in 30 days, they're going to be back in, but only on some items. So it's just like trying to spitball this. I mean, I think what we can clearly say is that obviously it's hampering investment. I mean, as a business, you're just not going to invest until you have some clarity moving forward. I mean, it's the same for the housing market.
And investment was slow before the tariff war started.
Yes, agreed.
Again, people had no reason to invest here anyway, right? It just wasn't. It didn't exist. Now they're not. They're not going to say now, oh wow, the Canadians are really standing up for themselves. Yeah, let's throw 300 euro in there.
Well, I mean, to one note here, Rich. I mean, we had the in the U.S. today, we had the U.S. job cut announcements in the I think it's the Challenger Index. That was the highest since what? The pandemic, I believe.
Yeah, a long time.
So I don't know how much you read into that, but obviously some U.S. job layoffs, maybe that economy's weaker than we know. Obviously, given what's happening, there's a lot of uncertainty on both sides of the border.
So I think you're right about the uncertainty. I think it'll affect consumer confidence. I was speaking to a lady who shares my office space, and she sells, specialized food for people with sort of stomach issues to the United States, and she was terrified, and she's really worried about it. And it was just so I think that worry is, I think, one of the real negative impacts. And that, by the way, that worry, as you've demonstrated, can have economic knock-on effects, which I think is important. But I think ultimately, like, a couple of things are not going to change. And I think that's what's so frustrating about watching the Liberal Party sort of really, really make a meal out of this trade war. Again, maybe we didn't deserve the trade war, but how we reacted was our own choice. And that's, the border is not going to change. And we're not going to rebuild 400,000 kilometers worth of pipeline. And you know what I mean? And like all these little like facts of the matter are, they're still going to be our largest trading partner, and like all these kinds of things. And so there must be some resolution going forward. And so the more we sort of waffle and muck about with, and bloviate over how powerful Canada are stepping up, that's all bananas.
So here's a stat. I'll give you another stat here. This is what Canadians should be up in arms about. Raise your flags over your house and all that stuff. And Steve, I think you shared this number with me, or it was Rich. I don't remember which one of you. But I think now what Canada will be spending on interest expense on their debt is greater than healthcare spending. So let's just all say that out loud, just for everyone to appreciate the amount of you're not saying it out loud. The amount of interest we're spending on our debt is greater than healthcare.
So what was that? So interest expense is larger than healthcare. So that means our interest expense was about 52 billion, and healthcare was what, 53 or 52 or so?
Yeah, close to that. That is the outrage here. That is the outrage.
I just want to going in, this is like a developing news cycle here. So we're recording on Thursday. Maybe there's a resolution here by the time you're listening to this on Friday or Saturday. But again, I just told you guys that Trump has opted to give Mexico a 30-day relief here on the tariff stuff. Canada has not got it. We've had some comments coming out from Trump here. So Bessent says Trump is open, which is Bessent's the Treasury Secretary, right? So he says Trump is open to negotiating on tariffs, but not, quote, if you want to be a numbskull like Justin Trudeau. So this is, again, we've said this from the beginning, right? I don't care what your political views are. You like Trudeau, you don't like him, you like Paul. I don't care who it is, but like, I think it's pretty obvious. Like, the one thing we have to say here is Trump doesn't like Trudeau. Trudeau is he's definitely more left leaning than Trump. He's just they don't see eye to eye, and so like I think you do need to get, whether it's Carney or Pierre, like you need to get somebody in there that at least can create a more amicable relationship. So we've got a lot more commentary on that. I was going to give you like two. So this is from Trump's True Social account. So these are two, like these just came in. So in one post, he says, quote, after speaking with President Claudia Sheinbaum of Mexico, I have agreed that Mexico will not be required to pay tariffs on anything that falls under the USMCA agreement. This agreement is until April 2nd. I did this as an accommodation and out of respect for President Sheinbaum. Our relationship has been a very good one, and we are working hard together on the border, both in terms of stopping illegal aliens from entering the United States and likewise stopping fentanyl. Thank you to President Sheinbaum for your hard work and cooperation. Okay, next tweet. Believe it or not, despite the terrible job he's done for Canada, I think that Justin Trudeau is using the tariff problem, which he has largely caused, in order to run again for prime minister. So much fun to watch. And so there you go. I'm not saying you need to like Trump, agree with him. I think a lot of Canadians are extremely displeased and dislike him for obvious reasons. But like we can't skate over the fact that Justin Trudeau is not the right guy to be negotiating with him.
It sounds like he's getting advice from Rich. Rich is the advisor now.
What pro of Trump or of Justin Trudeau? I mean, two things I'd like to point out. One, two different people wrote those tweets. I would bet my life on it that Trump did not write the Claudia Sheinbaum tweet. So that was Stephen or whatever Bessent. And the second thing, which should really frustrate Canadians, is this is why what they did to us is by proroguing Parliament, by going through this leadership rigmarole, was especially, frankly, bullshit. Because if you are Justin Trudeau on November 6th and you genuinely are putting Canadians and Canada first, you either resign or you grovel, and because you know that relationship was acrimonious, and what they did was they did the total opposite. And it's amazing. And I just think Canadians should especially pissed off about what's going on here. They should have had an immediate leadership thing that would have been over, and Mark Carney or whoever else would have walked in there with a fresh start and in a position to negotiate. And then you can have an election in October, and God, vai com Deus, go with God, as you say in Portuguese. But sorry, I had to get
that's Rich's best comment of the year. You've had a lot of good ones, Rich. It's pretty interesting for sure.
Are you a Trumper?
Me? No, I'm a Montreal Canadiens fan. That's the first thing that came out. Am I a Trumper? No, I'm a Montreal Canadiens fan. No, I'm a Canadian.
It's hard to shake it, Rich. Once you get it, man, it's tough. It's a tough one.
He's been.
Hey guys, the sun is setting here, so I got to wrap it up here.
Okay, he's got to go.
All right. Well, I mean, there we go. I mean, I guess to summarize this podcast is there's a lot of volatility out there. This is a moving target. Trying to put a number and an analysis on the implications, I think is almost a pointless effort. But I think, hopefully this gets resolved in the near future. And hopefully, I think the Liberal Party's election is what? Rich, is it this Sunday?
You mean the coronation?
Coronation. Mark Carney, your next PM. I don't know. Someone said Trudeau might be staying on as an advisor. I don't know. We'll see.
Oh,
But
brother.
yeah, I mean, hopefully we can.
It's like a Monty Python skit. Anyways, let's go. Keith's got to go.
All right. That's a good place to wrap it up. I'm as confused as probably all of our listeners here. So we'll see what happens. But as always, guys, we appreciate the support. Thanks for tuning in to our babbling here. And we'll see you next week.